presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for tuning in. Wednesday, just after 3 p.m. Eastern Time. We got 1 hour left to go in the trading day, and you have markets. Yeah, so much for a pause in that bull market, man. We take it back, and you almost get back all the losses of yesterday and then some. S&Ps, we're up by 0.5%. You're up by 33 points. That's your daily. You take a look at the 15-minute, and as you can see, we bounce back, as I talked about in that top of the hour update. Pretty remarkable that where do we hit? 68.0275. What was the high at 12:15? 68.0275. What was the high at 2:15? 68.0275. S&P's bumping up against all-time highs. We're up by 0.5% or 34 points. NASDAQ 100, we take out yesterday's highs. You have chip stocks trading higher yet again. NVIDIA making a deal with XAI. Jensen Huang, he was out there on CNBC this morning saying that everything is cool, folks. Oracle's going to make a lot of money. You don't got to worry about that. Oracle's up by 2.3%. They were talking about that he is seeing the demand in their sector accelerating, over the last 6 months. So no worries about that as well. And I say it in jest, as in what else is he going to say, folks? But nonetheless, he was out there. You have NVIDIA pouncing higher. You hit 271 yesterday in that first acceleration. I posted an article in the Den this morning from Bloomberg. If you're not in the YouTube Tigers Den, folks, check it out. I posted it just after 10 a.m. Eastern Time when I wrapped up the morning program. OpenAI, NVIDIA, $1 trillion AI market with a web of circular deals. This circular deal, circulatory risks. They talk about these risks within their disclosures as a public company. NVIDIA, OpenAI, Microsoft, Oracle, XAI, AMD, Intel, CoreWeave, and then the other participants in there as well. But check that out in the Tiger's Den, and it marches on. And nonetheless, all those stocks plowing higher with the NASDAQ making new highs. And there you see NVIDIA up by 1.9%. You jump over to Oracle shares, up by 2.3%. Oracle's gotten it all back from yesterday, folks. All of it. That story that broke about their margins, not even impacting this thing. AMD, how about that? 10% higher. This market's on fire, man. 232. AMD was just trading at 165, folks. 165. Yeah, coming into Monday. Friday, 164. Now, let's take a look at the volume, S&Ps. We had some volume selling yesterday, Check out the S&Ps. We'll jump over to the SPY in a moment. You take a look at the futures. Yesterday, you trade lower, 1.37 million contracts. Today's day higher, almost half of that. Now, we got an hour left to go in trading, But yeah, we had some selling, and the buying, not exactly convincing today. That's the S&P. You jump over the SPY, SPY, pretty similar action, right? Yesterday, the SPY does 72 million, 41 so far. That's not how you like to break above the highs, folks. That is not quality volume breaking above those highs of yesterday, NASDAQ 100, futures, yesterday, 532,000 contracts. Today, 363. You're taking out the highs on lighter volume. Now, we got an hour left to go in the trading day, 50 minutes. But still, we're not going to catch yesterday's volume unless you have something spectacular or out of the ordinary. And then look at the Qs. Yesterday, 58.2 million on the downside. Today, 35 million, folks. 35 million versus 52. 35 million versus 58.2. And we'll see how much we trade in the final hour. But nonetheless, we're trading higher on lighter volume versus that sell-off yesterday. Jump over to gold. Yeah, you can't help but talk about everything, man. Gold, it's big volume, folks. It just keeps going up. Look at this volume today, Today's volume is the most volume we've had since over a month ago. That's how you like to see it keep breaking higher. Now, check this out. Gold on a weekly. Now, we don't have this week's number yet, okay? But watch this. Last week, we did 1.3 million, okay? Huge number. Just keeps going up. Last week's volume on gold, the most since the week of April 21st, okay? We did 1.3 million, 1.32 million to round. The reason why I bring it up is because just in the first 3 trading days, 272 plus 288 plus 315, you've done about 900,000 contracts in the first 3 days. We got 2 days left, folks. You only got to get above 1.3. That means you only got to average about 200,000 contracts for the next 2 days to take out that number to do it with volume. So metals are on fire right now. Silver, same thing. Okay, look at the volume. Now, we'll see if silver can catch it, because that was quite an acceleration last week. 512,000 contracts last week on silver. You take a look at the daily, and we've only done about 270 this week. So different story, right? Gold just keeps coming with the volume, man. Silver, it's lightened up a little bit so far compared to where we were last week. Now, how about platinum? They're talking about platinum in the Tiger's Den, folks. In the YouTube Tiger's Den, EKS, I see in there. That's right, moonshot, highest price in more than 12 years. Now, you want to take a look at the chart, folks, okay? Whoo-wee. Talk about a run and a decline. Platinum at one point, trading above gold, okay? 2,300, the doldrums of the financial crisis to 750. You make it back to a high of 1918 in 2011. And boy, that's a monthly. Check out this. Check out this acceleration, folks. Now watch this. Because watch this. I was doing this beforehand. I took it off so we could do it again. Your A to B. Your C point has platinum. Watch this, to 1912. Right? And what did I just say the high was? 1918. Okay, so the 1-to-1 takes you from the high of 2011 on platinum, man, and platinum is on fire right now. You take a look at the volume, and we have dropped off a bit. It's the one thing we want to watch here. Huge explosion September 23rd to the upside, and on a weekly basis, though, that week of September 22nd, that's how you break a B point, man. Okay, your B point out here on a weekly, 125,000 contracts, 143,000 contracts. You break above it with 219,000 contracts. How's that for strength? How's that for adding a little volume to those charts? So platinum on fire, gold on fire, silver holding up so well in some of those silver stocks, right? First Majestic, up by 10.4% right now. Look at this run, man. From $5.69 to $14, you jump over to Hecla, up by 11.5%. My goodness. All right, folks, S&P's up 0.5%, NASDAQ 100 up by a full percentage point. Stay tuned, folks. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Markets within about 4 points of all-time highs on the S&Ps. And as I speak, NASDAQ 100 making all-time highs. There you are, 25,300 on the NASDAQ 100, up by more than a percentage point. Dow up by 24 right now. And yeah, the leaders, NVIDIA up by 2% right now. Apple shares up by 0.6%. Google in the red. What's going on with Google in the red by 0.6% right now? Jump over to Amazon. So Amazon, they've got new kiosks for pharmacies. They're going to introduce kiosks at their One Medical Pharmacy in LA. The market likes that news, 1.5% to the upside on Amazon. And yeah, it's the usual culprits though. AMD shares up by 10% right now. Oracle shares up by 2.4% right now. Intel is flat after a little bit of volatility. We jump over to Broadcom, up by 2.1%. CoreWeave up by 9% right now. Every day, AI gets some news that send these equities up 10% somehow, folks. Remarkable. All right, we jump back to the Fed in focus. So 3 weeks from today, the Fed meets. 3 weeks from today. That one's chopping around a bit. I think we're sitting at about 4.12 right now. I'll pull it up in a moment. Let's see where we're at. What are we sitting at? 4.13. Okay, 4.13, the yield on the 10-year. And so we get the Fed minutes at 2 o'clock. And those minutes, as they say, caution over inflation. Doesn't really reveal too much when that's obviously the case. Okay, the vote was 11-1, as we know, to cut interest rates by 1/4 point. The minutes showed that a small number of officials were reluctant to support the rate cut. A few participants stated there was merit in keeping the federal rates unchanged at this meeting, or that they could have supported such a decision. Participants generally assessed that recent readings of these indicators did not show a sharp deterioration in labor market conditions. Job concerns. Participants stressed the importance of taking a balanced approach to promoting the committee's employment and inflation goals. Well, that's the case. It's always supposed to be balanced. While policymakers noted that risks to the labor market had risen, many also felt a rapid drop in employment was unlikely. So the battle marches on. All right, and you jump around to First Brands. So Jeffries, yeah. Now, let me see if I can get the the article the way Bloomberg put this up. Yeah. So this is the article that I first saw. Excuse me. BlackRock seeks cash from Jefferies Fund exposed to First Brands. Okay. And First Brands bankruptcy spreads to Jefferies and UBS. Now, Jefferies, down more than 6%. We'll pull it up on Wednesday, said funds run by an asset management unit are owed around $715 million from companies that bought First Brands parts. Whew. UBS have around $500 million of exposure. The twin disclosures illustrate the tangle of financing that flowed through First Brands, which collapsed late last month, owing more than $10 billion. Probing irregularities in its financing arrangements. Pretty remarkable that you can have banks like this loaning almost $1 billion of action, and there's irregularities. So, at Morgan Stanley, Jefferies' possible total exposure as an investor in the funds, $44 million. Jefferies said First Brands for years would receive payments from customers and promptly send those on to Point Bonita. And on September 15th, they stopped paying. Well, that's how it works, right? They pay until they don't pay. Jump over to Jefferies. Yeah, it just keeps going, man. Oh boy, look at this. Okay, watch out for this equity, man. Spike down on the April lows. You have a nice volume spike in June. Put on the daily. Yeah, you're getting volume today. It's going to be record volume today. Let's go back a little further. Boy, look at this. Whew. Back to 2008 like nothing. 17 years in Jefferies. 17 years. Imagine that, right? You're a financial group on Madison Ave. What's this company worth? $11.4 billion. Jump over to UBS, down about 0.5%. Yeah, compare those two charts, right? Although, look at the volume on UBS. Be careful there. That's a monthly. It's a weekly. Some nice volume the week of September 29th, but look at that monthly. Doesn't mean it can't fade higher on lighter volume, but anytime you see a chart line up that perfectly, where it just keeps going up as volume keeps going down, it should give you pause, folks. That's not how markets work in generally, and it's definitely not quality volume, as my dad would say. So we talk a little housing and rates. Yeah, there is a pent-up demand, folks, for people to have access to rates. Homeowners are pouncing on the tiniest drop in mortgage rates, okay? A minor move in mortgage rates, the cost of a 30-year fell 0.3 percentage points. And this was leading up to September 17th. So things have changed since then, though, folks, okay? September 17th was the Fed meeting. We've bounced since then a bit, maybe 0.1%. Refinancing activity jumped over 80% in that period of time. Okay, and this is the mortgage refinance index, but look at the upticks we got going on. Now what's remarkable is, okay, so check this out. I refinanced my property in Tampa in 2019, okay? And I did all right. I got a 3.75% mortgage. Could be worse. You know, everybody took advantage of it when things were at zero. I generalized, right? And then nobody was. When you got rates to 6.08, you see that? And we didn't even get that low, and you got an uptick now. Now, what's remarkable, though, is, folks, time flies, okay? We're dealing with now, I am 6 years into a refinance that feels like yesterday, okay? And if you remember, now, look at this chart here, okay? This is talking about refinancing. And there was a huge acceleration from about the end of 2018 to the end of 2019 prior to COVID, okay? And the reason why is because you had rates dropping already. If you go back to the 10-year and you look at where we were, so there's the end of 2018, you had lower price, higher yield, and look what happened, right? You had yields drop dramatically going into that 2019. You saw the acceleration and then you saw it really ramp up at 140. But there was already an acceleration going on. So people were refinancing all through 2019. I was getting 3.75 at the end of 2019, folks. Standard refinance, you living in your home, okay? And we're at 6 years of equity now, while you had price appreciate. We're gonna finish this up. We'll take a look at some of the home builders. D.R. Horton, Lennar, we'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Markets in the green, continuing higher. S&P's about 2 points away from those highs right now. 6,800 on the dot. NASDAQ 100 up by 1.1%. Dow up by about 0.1%. You take a look. And there it is, the heat map. That's the S&P 500. AMD up 10%, right? Broadcom 2%. Look at this tech sector. Oracle up 2.4%. Some of these networking stocks. Arista up 8.5%. Cisco up by 2.2%. CrowdStrike up by 5%. This market, man. Amazon shares up by 1.4%. We talked about. Yeah, Micron up by 5%. Texas Instruments. Analog Devices. Jump over to IBM. Giving it back today after their deal with Anthropic, down by 1.8%. They got the acceleration yesterday, and you actually give it back. All right, talking about the home builders. So, and rates and refinances in general. So yeah, the 10-year, something a lot of people don't keep in mind was there was a refinance rush in 2019, right? Take the COVID, gift that many people got to refinance when rates were so low. But you had that acceleration leading up in 2019, and I was one of them. Saw the rates, didn't know COVID was coming, right? And I said, a 30-year? 30-year? You're going to give me a 30-year or 3.75%? I'll take it. Okay, and rightfully so. Okay. As somebody in finance, right? A home mortgage, folks, is an option, right? I have the option to keep that interest rate for 30 years. I knew there was the option that it could go lower, but I also knew there was a dramatic risk it could go higher. Didn't take long, man, right? Even with COVID, it took just over 2 years for 3.75% to be a dream on your mortgage, okay? And you look at this article from the Journal, and so yeah, we got a little bit of an uptick in that refinance index. Excuse me. There it is, back to 2019. Then you get the COVID acceleration, and then you saw the first uptick coming in last year where we had rates drop to 6.08, and now we're still got an uptick, and we're not even at 6.08. Right now, okay? We're flirting with 6 maybe. They talk about here 6.26 is what those numbers went to when they were at a low on September 17th. Now, check this out. The borrowers who have no equity, okay? Of course it makes sense for borrowers. Anybody that's bought a house in the last 3 or 4 years, you heard the tagline, right? Marry the house, date the rate. I remember... Okay, my dad's saying, folks, do not buy a house unless you can actually marry the rate. If you date the rate, that's a great thing. Maybe you get a bonus, but do not think that it's guaranteed, and it's not guaranteed. It hasn't come yet, right? Those borrowers, they're the ones that want to refinance, right? Because that was their plan. 90% of all rate and term refinancings were for loans made in 2023 and 2024. So still, you're talking about people aren't accessing it for equity, okay? They're accessing it to decrease their mortgage payment, period. People who refinanced in the second quarter saw their debt-to-income ratios drop to 34%, the lowest level since March of 2022. It's going to ease some pressure on those budgets, right? You're lightening up your payment. So at the current mortgage rates, over 3 million borrowers could reduce their rate by 0.75 percentage points and save almost $400 a month. At 6%, now we're not at 6, I think that was probably going off this number right here where we got to 6.26, okay? If we get down to 6%, that's only a quarter point, and we should get to 6. The 10-year is only at 4.1 right now, folks. You can put out mortgages at 6%, as in, a 2% spread from the 10-year to a 30-year. Now, there's different things going on with longer-term rates right now. But at 6%, almost 6 million mortgages, okay, could shave 75 basis points off their rate. This group, okay, if you just get to 6, has unpaid balances, debt, of $1.5 trillion. So there is $1.5 trillion of mortgages out there that if we just get to 6%, you can see them shave 75 basis points off of their number, okay? And the number of in-the-money mortgages under different 30-year rates, okay? This is where we got the number. So you can see how at 6%, you're going to have 5.9 million mortgages that can cut their rates by 75 basis points and save money. You ever get to 5%, and we're going to have 13 million mortgages that are, quote unquote, in the money that they can then refinance and have a reduction of at least 75 basis points. Now, what's remarkable is I'm at the bottom of this rung, and I refinanced prior to COVID. But yeah, keep your eyes on the top of this chart because, and you know, there is a pent-up demand, folks. In the second quarter, borrowers doing cash-out refinancings took on a rate 1.45 percentage points higher than their mortgage that they had and raised their monthly payment by $590 in order to withdraw almost $100,000 in cash. Now, their payment goes up on a monthly basis. Hopefully they're not spending that instantly if they can't afford the payment. But in reality, what is that? That's almost 10 years of payments that you're making, right? So you take out the $94,000, you get 10 years is what it'll take you. And in 10 years, that asset's probably going to appreciate, folks. And that's the other side of that conversation. But a growing backlog of borrowers who are waiting to refinance, no matter what your reason, they're even more sensitive to rates than they were last year, and that's going to keep happening. So imagine, when we get a new Fed chair in May, okay? We're going to get a new Fed chair in May of 2026, folks. Rates were at 3.75 7 years prior to that. And it's been a 7 years of inflation and asset prices that there is a real pent-up wall here, and you see it with these types of upticks in the ever slightest pullback in rates, and people are jumping out of their skin to do it, because guess why? You can do it again, okay? Lock in those rates, and yeah, there's dramatic cost to refinancing, folks, okay? But guess what? You can just do it again if it's that big of a move, right? When we take a look at some of the home builders, and yeah, I think we got a test going on, folks. One more test for these home builders. Look at this sell-off we got in the last earnings for Lennar. D.R. Horton. Look at this weekly on D.R. Horton, man. That's a weekly. Take a look at the volume in these home builders when we come back. So we got volume and selling in the home builders. We'll come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Markets in the green, right near record highs across the board. And yeah, finished up the conversation talking about rates, and we take a look at the home builders. Now, this is a weekly. We're talking about D.R. Horton. You know, you've had some nice volume on the way up, but recently on this sell-off, you go back to the week of September 15th, that was an acceleration in selling, nothing like we'd seen since their earnings in July, and it's only Wednesday, and we've already done about 12 million shares. It's trouncing the week prior on this pullback. You take a look at the daily. Yeah. Jump over Lennar. Pronounced volume. I mean, this is, you know, if you have time in the trade, folks, my dad's book, his chapters on quality of volume. It's a perfect example of how it looks. And, you know, I think this market, again, just got ahead of itself a little bit. Okay? We don't get a new Fed chair until May. That's 7 months away. If there was one more sell-off, and then we might get a little run. But, yeah, getting Lennar at 144, no, we're at 120, just like that. Some tough earnings in the go-around. D.R. Horton's pullback, we check out KB Homes, another one, same deal. Yeah, we get some real selling coming into this low here, about $62 for KB Homes. I think we got one more test. When we come back and test some of these areas of high volume, June 23rd, looking at about $52 out there. We're at $60 on KB. Jump over Lennar. Yeah, similar around their last earnings. When you're crushing higher, Lennar, that's only putting it at about 114. You're at 120. D.R. Horton, that's the bar from July 21st on their earnings. Anywhere from about 150 down to low 133. I think we have one more test of these home builders, not just yet. No test in the NASDAQ as we crush higher. 25,306 right now in the NASDAQ. S&P up by 0.5%. Jump over to Tesla, up by 1% right now. So Elon always in the news. This one especially interesting. That CEO of Twitter, he got a nice pay package, man. He took that as amazing, right? Musk, they offered that $44 billion. He said, I'll take it. Done. And part of that is that he got a nice little pay package. And he was doing it for the shareholders, but he had a nice pay package. And they have resolved the $128 million lawsuit. And it seemed like he had a good case in this. So I'm guessing that he got a pretty penny. They've reached the settlement. And the settlement requires certain conditions to be met in the near term, but those were not disclosed in a September 30th filing, which pushed back deadlines in the case, as they have an agreement. All right. So Ford, see this plants that they have? Some big problems going on with the Ford plant. Trying to find the article in details. I had it up here earlier. Yeah, well, this one works. I think I was reading it on Bloomberg. Yeah, so Novelis, this company. And you'll be reading about this, folks, in terms of the F-150. And this isn't the article I had. I had the journal, but... So this company, the plant's operator, supplies about 40% of the aluminum sheet used by the auto industry in the U.S. A major portion of the Oswego, New York plant has been knocked off until early next year. Ford's the biggest user of the plant. The F-150 pickup, it's severe enough that Ford's likely going to potentially flag the implications to investors as they talk about their quarterly disclosures later this month. So the F-150, which has been a top-selling vehicle in the U.S., one of the main profit drivers, they say, and they switched to aluminum from steel a decade ago. Now they're trying to import some of this from overseas, but guess what? Costs. 350,000 metric tons of sheet aluminum for the automotive industry. Around a dozen automakers get aluminum from this company. Ford, Toyota, Hyundai, Volkswagen, Stellantis, all of them, right? And yeah, they're working to mitigate it. And they're going to work to import that aluminum. Now, it's amazing for people in the know, right? You think that information is disseminated equally, folks, okay? This fire took place September 16th. It brought down part of the factory's roof. 26 fire departments showed up. September 16th, okay? But now it's become material. But that's the 16th, 17th, 16th. Nothing going on, right? And today, yesterday actually, you wake up to that. And yeah, they're turning to some of the plants overseas to supply aluminum for the customers. But guess what? Guess what happens when you go overseas? 50% tariff on aluminum. So watch out for those F-150s and what they talk about on their earnings coming up at the end of the month. But yeah, never think you know more than the market, right? Can you imagine if something was going on? Can you imagine if you knew this going into this, right? Plenty of people knew it, man. September 16th, 26 fire departments, the roof collapses. They produce all the aluminum. That aluminum's used in the Ford F-150 and many others. Nonetheless, now it's public, and Ford continuing lower. And yeah, we got some volume on a daily. Boy, you know, on a weekly basis, right? What was I just talking about? We see an equity just climbing higher as the volume just drops off. You know, dramatic volume in this market, quite the acceleration. But, you know, when you have equities going this way, folks, and you have volume going this way, that relationship can't last forever. It can last longer than you can remain solvent in a trade, which is why you better have stops out there, okay? And then you wake up and what are you gonna have? You're gonna have volume off the top. This is a weekly. We've already done 312 million shares, and we're coming into 400 last week on Ford, trading lower by 1.1%. All right, folks, we'll come back and we'll take a look at metals to wrap it up. Gold backing off from the highs, up by 1.5%, $4,063. We'll take a look at the miners, we'll take a look at metals. Coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Gold just off the highs of 4,081. It's a 5-minute chart. We had a little bit of selling right about 3 o'clock there. Gold up by 1.5%. Jump over to silver, up by 2.4%. Jump around to some of the equities. Agnico Eagle up by about 2% right now. Harmony up by 2.5%. The silver stocks are really rocking, man, right? First Majestic up by 11%. Hecla up by 11.6%. Pan American up by about 1% right now. We jump around to some of the other gold equities. New Gold up by 0.7%. Vista Gold. You get that run to 246. You're up by 6.1% for Vista, up to 233. That 246, how about that? To the penny, right? We spiked to 246, was the high September 15th. September 15th on Vista, 8.8 million shares traded. Now we're going to have over 4 today. Coming into those highs, quite a run for Vista shares. Check out Alamos, up by about 2%, no matter where you go, folks, today. XAU, continuing higher, up by 2.9%. The HUI, up by 2.8%. And yeah, how about Platinum, man? Now, as I mentioned, Platinum, right? Put this on a weekly. If you didn't check that, catch the beginning of the program, folks. We got a nice A to B, All right, you break that B point the week of September 22nd. You do it with 220,000 contracts. You're trading into like 140, right? Huge volume, huge price expansion. That 1-to-1 on platinum brings you to 1912. And guess what? That's the high of 1918 back here in 2011. Platinum having a run, and it looks like it's not going to stop. Breaking higher with volume. All right, folks, look at this market. We're breaking highs as we speak. New highs to the tick. S&Ps up by 40 points. NASDAQ 100 up by 1.2%. Folks, thanks so much for tuning in. Spend your afternoon right here at TFNN. Have a great night. Have a safe night. Enjoy it, folks. Enjoy your time out there, whatever you're doing, enjoy it. And we'll see you back here tomorrow morning. Have a great night, folks. Thanks so much.
Building wealth